Welcome, Ecom Logistics Nation. Thank you for joining today's episode. We're on a mission to share e-commerce logistics insights, trends, successes, and challenges from the leaders and innovators in our space.
The logistics industry, the transportation industry is cyclical, even if in the long run there's growth. But unfortunately, that's one of the consequences.
Welcome, Ecom Logistics Nation. We have a special returning guest episode for you today. Joining us is Ben Gordon, Managing Partner and CEO of Cambridge Capital and BGSA. Ben, we had such great feedback from your first episode. We're thrilled to have you back. And for those that might have missed that episode and want to go back and have a listen, it aired October 17th, 2022. And for those, Ben, that are hearing you for the first time, could you please share with us your background and an overview of Cambridge Capital and BGSA?
Dan, thank you. Pleasure to do that. Great to see you and Ninat and part of the gang here once again. So appreciate it.
Thank you. Thank you for being here.
For those that don't know me, I'm Ben Gordon. I'm a supply chain guy. I've spent my career in supply chain. I've started 5 companies dating back over the last 24 years. Starting when I was still in business school and wrote the business plan for a SaaS TMS company called Threeplex, venture-backed company. Almost got kicked out of business school, but squeaked by and ultimately sold the business. It's now a tiny part of IBM. Built several other companies since then, and today I run Cambridge Capital, which is a private equity firm that invests in great companies in logistics and supply chain.
Awesome. Amazing. Well, it's so great to have you back with us, Ben. And want to just get right at it. We are at the end of yet another wild and crazy year. So would love to get your perspective on the look back over the past 12 months.
Well, Dan, I have to say that if you were going to ask me last December how 2023 would go, I would not have predicted this. I'll tell you that we had our annual conference, as we do every January, the BGSA Supply Chain Conference, and our 18th annual conference coming up this January 24th to 26th. Last January, Dan, I remember we had a panel with 4 CEOs of the then leading companies in the trucking industry. I have to say then, because unfortunately one of them was Yellow, and which is still quite a shame. But I mean, look, Yellow and Estes and Werner and UPS actually, and the consensus feedback from that panel from 4 really smart guys whose opinions I value was that we thought we had another 6 months of bad news. We'd hit bottom, and that the back half of 2023 was going to be great. We were going to have a freight recovery. Rates were going to be up. Volumes were going to be up. And as you know, that's not what ended up happening. So my point is only to say that if I didn't know, and some of the other guys that I consider to be really smart in the industry didn't know, it's sure awfully hard to predict what's going to happen next. But I think it's worth noting why. Because I think there are probably 3 critical factors. The first is supply and demand, right? So too much capacity chasing too little demand. Why is that? Well, too many trucks, not enough demand. Why are there too many trucks? One reason there are too many trucks is because during the boom times, I think our human nature is to assume that what's happening now continues in that direction. And we had, 2020, 2021, tremendous growth in demand. Some of that was artificially stimulated by government money. Some of that was, of course, the growth in e-commerce because we were all working from home, buying more things on an e-commerce basis. And so anyhow, there was this spike in demand. And I think everybody thought that was secular, but it turned out to be cyclical, up and down. And so as a result, we projected that forward. All of us did. And what happened? People said, "Hey, I've got a truck. Now's a good time for me to add a second or a third or a fourth. And by the way, I could borrow for free because 0 interest rate ecosystem." So the point is, number one, too much capacity, too many trucks. Then when that cyclical demand came down, we had this imbalance, and we've had these imbalances before. 2019, we had it. 2007, 2008, we had it. So the logistics industry, the transportation industry is cyclical, even if in the long run there's growth. But unfortunately, that's one of the consequences. So I think one, too much capacity. Two, too little demand, and that's that cycle that we talked about. And then three was the spike in interest rates. So if in 2020, 2021, really, if you think about it, I think it's safe to say that our respective careers. Well, I won't guess anybody's age. I'll just tell you mine. Okay, I started my first company in '99, and over the course of those 24 years, almost all of them were in record low interest rate levels in all of American history. So guess what? When interest rates are low and the cost of borrowing is low and financing is easy, it's a different world. And so Warren Buffett says, when the tide comes in, you see who's been swimming naked. Well, the tide came in. Tide came in when rates went up. Rates, shot up in the last year and a half, for a number of reasons, inflation being the most important. And in a world where interest rates are super high, cost of borrowing is high, people's willingness to spend goes down. And so now all of a sudden you had this trap. And the trap meant that trucking companies were under pressure, shippers were under pressure, everybody was under pressure. So long story short, I think that's why we've seen this deep and long freight recession over the course of the last year and change. So unfortunately, that's been bad news for a lot of great companies. I do, however, think this time, I do think we're within 6 months of things starting to get better. And let's see if that's true.
And would you say that's based on the peak season performance that we are seeing as well out in the market to say, hey, you know what? Maybe we need to start shifting how we do demand planning or procurement exercises or whatnot. Like, do you see those patterns changing is what's telling you that 6 months we're going to see the tide turn?
Yeah, so I think there are several factors. One is what you just mentioned, that we are seeing some peak season activity. There was no peak season activity last year, so that's good. Two, if you look at the freight rates, things have been kind of bumping along at the bottom, and they've ticked up over the last quarter. My friend Chris Pickett, who publishes the Pickett Line and is a pretty smart analyst when it comes to this topic, believes that we've hit bottom and things are ticking up, and that data supports it. And then three, look, I mean, how do supply-demand imbalances get resolved? Well, one way they get resolved is when companies go bankrupt and capacity exits the market. In the last year, sadly, for some terrific people at some terrific companies, there have been a lot of bankruptcies. Yellow is the largest and the most prominent, but certainly not the only one. We've had more bankruptcies this year than in any year since 2008. And when the final data is in, it may prove to have been worse than that as well. So while that's terrible and tragic for the people involved, the employees, shareholders, and other stakeholders in those companies, what it means for the industry is some capacity is left. And that's a reason why things are starting to firm up and get better. So is there still more left to do? Yeah, there is. But I think for all those reasons, I do believe things are starting to get better, and I believe they'll continue to get better.
Yeah, and the third point you made specifically, right, around how do you correct the imbalance of supply and demand? Is it like bankruptcies and people going out of business? And it seems like to the point you were making, right, like there is the two ends of the spectrum. You have the large ones, right, like that already had the pressures and they got to run this large operation. If they weren't financially prudent, let's just say, they struggled. And then there is a lot of independent owner operator. And that's what some of the sad story actually happens to be as well. It's like life savings of, buying that truck for $300,000, right? And having that second one. And like, I take a lot of Uber rides and, live in Toronto. And I can tell you, half my Uber drivers are actually truck drivers. That's kind of the dichotomy in Toronto. And so I start having the conversations, and that's what you find. It's like I had a truck and I'd filed for bankruptcy, or if they are just a driver, they are basically saying it's a race to the bottom. Who's going to do it at the lowest cost per mile, right? Like the pressures that are built up. So it's really good news to hear that there is some improvements that are coming in the market itself. And maybe just in those lines, so there is this freight recession, as you kind of called it. what about the general state of the union? I don't think any one single analyst is able to agree right now on where we are. What's your opinion on like the general state of the economy as you look at like 2023? Have we bottomed out?
Well, my opinion is yes. But there are a couple of moving parts. I mean, one, the fact that it looks like we are no longer in an environment where the Fed's going to keep raising rates. You know, the joke, the old line was that the Fed is like the guy that takes the punch bowl away just when the party's getting started, and they do that by raising rates. Well, they raised rates by a lot in the last year and a half. It looks like that's over because it looks like the record high inflation levels that we've suffered over the last year and a half have started to stabilize, started to come down. So look, if interest rates are more favorable, right, meaning there is a reduction in those rates, that puts more money into the economy because it makes it cheaper to borrow and it makes it easier for businesses to grow. So I think number one, we are seeing that, and that's good. Number two, while I'm not an economist, I read the same data sources that the Wall Street Journal and otherwise. Consumer spending is starting to tick back up, and then look, I think number three is there's this whole realignment of supply chains and the shift in dependence from China to the shift to North American manufacturing and U.S. Mexico supply chains. That's actually good news in terms of economic growth because it's an incentive to both to spend money on building manufacturing capacity and then to bolster the supply chains that connect those. So I think for all three of those reasons, we are seeing things start to strengthen.
Beautiful. This term reshoring, the amount of times I've heard that, I'd never heard that before. And all of a sudden it's like it pops up in my stream all the time, this concept of reshoring. So now that's great. And, just switching it up onto the forward-looking side of things, right? Like, so you mentioned this is cyclical. This happens, right? So what are the lessons you would say for business owners, independent owner operators, freight companies, logistics companies, shippers, everyone, right? From a financial prudence standpoint, like what should companies be doing as they think about protecting, creating moats for future? Hopefully not for the next few years, but what are the lessons learned based on some of the things that we saw happen this year?
How do you create moats? Well, it's a great question. I mean, in the end, I think most companies think they have something differentiated, and you find out if it's true or not in a situation like 2023. And so, I mean, if I look at, just as an example, my portfolio, so Cambridge Capital has 8 companies in supply chain logistics, supply chain technology, and I'll just give you a couple of examples of companies that I think have moats and that, in turn have been able to grow at pretty strong rates despite the economic pressures. So Greenscreens would be one. Greenscreens is AI-powered predictive pricing for trucking and for truck brokerage. So what does that mean? If I wanted to ship a truckload of freight from Pittsburgh to Palm Beach, what should it cost? Well, the old way I did it, I might have gone to a DAT or somebody else and looked at what the historical rate was. That was backwards looking. That was an average. It wasn't specific to my freight patterns or my lanes. And in a world where markets are volatile, you really want forward-looking data, not backward-looking data. So Greenscreens figured out if they take your data and feed it to their algorithms, and a lot of people talk about AI, but very few people are really doing it. But Greenscreens has amazing AI engineering and machine learning capabilities. So, and they now have close to $10 billion of freight flowing through their system, which continues to train the algorithms to get more and more accurate. So they are able to look at your data and tell you, hey, given your patterns, this is what you should be paying right now today for this, origin destination combination, for this Pittsburgh to Palm Beach truckload. And the accuracy rate is dramatically higher by some metrics, a 5x lower error rate when it comes to the pricing. Why is that great? Well, it means if you're a truck broker, you know exactly what the right price is to quote, so you don't have to play this game where you're guessing Because if you don't know, what do? You always add in a cushion just in case you're wrong.
Yeah.
But if you can eliminate the error factor and you could just be precise, A, you're more accurate. B, you have a much higher win rate. A truck broker that had a 5% win rate could have a 30% win rate, which means that their frontline people could be 6x more productive. That means that while their gross margin might be similar, right? Meaning how much do they take after they've charged the customer, the spread between the customer and the carrier. Everything below the line becomes much more profitable. So it helps make freight brokers a lot more efficient, a lot more successful. And that's a reason why in the last 2 years, Green Screens has won 150 of the top 200 freight brokers. So that to me is a pretty good example of a moat.
Wow.
And it's a reason why they've had terrific growth this year.
Wow. Dominating the market.
Yeah. And then I'll give you another one that's knowing that there's some reverse logistics brain power on this call with you guys. One of our companies is ReverseLogix, which is software for powering return. ReverseLogix does is they don't do the service, they just do the software. Their software powers returns. It's a returns management system for logistics companies, brands, CPG, retailers, the whole ecosystem. And what's special about that is think of it as like a WMS that operates the entire workflow in a facility, except it's in reverse. And so if you implement a ReverseLogix system, once you're implemented, the labor savings are tremendous. I mean, you might take out tens of millions of labor cost, and therefore take what's usually a loss center and turn it into a profit center, right? Because people lose a lot of money on returns. And then secondly, because that ends up getting integrated into their other systems, much like you have a TMS, you have a WMS, you might have an OMS. Well, now with ReverseLogix, you have an RMS. And so, we think they're the category leader. They're the only one that really does that. And by the way, that also makes them not just really valuable to their customers, but it also makes them a very predictable business, a sticky business. And in a world where we've just experienced the pain of volatility, where there could be a 60% drop in freight rates like we saw this past year, that kind of predictability, it's great for the customer and it's great for the software company. So I think in a very different way, ReverseLogix is a good example of a moat.
Absolutely. And I as you called out, I play in the reverse space quite a lot and get to analyze lots of stuff that's happening in the market. And literally every single day, I find how little the world knows about reverse and how many brand shippers, retailers don't take that as a value center and the ability to drive more profitability, more customer experiences, improvement around that. There is so much that goes around it. And one of the things I got to say is this was the first year where I'm seeing not just the big retailers, but mid-sized brands that are starting to take this very seriously as they are to bring in financial prudence. Returns has now become this really critical thing. When the going was good, it was all good. Now that the going is not as good, that's where everyone's realizing how much that they can actually recover from those returns goods and the experience that they can provide to customers. Completely agree.
Yeah.
Those are dollar bills sitting there, right?
Yeah.
They're dollar bills. They're not pennies. There's a lot of money to be recovered. And I think, Ben, those were two really solid examples. And maybe for our audience and listeners too, for those companies, for that executive team or, founders that are trying to keep their heads above water, struggling or adapting to these changing times, is there any piece of advice you could give? Because what I'm actually hearing from you with those two examples, it's a laser focus, right? But I'm sure there's other examples that you could provide on, what to do in these times.
Definitely. Well, you're right, Dan. There are two different types of examples because one is more a transactional system and the other is more an enterprise system. But they both have in common just what you said, a laser-like focus on doing one thing really well. So you asked about advice. I think here's my observation. The most successful companies tend to be doing one thing extremely well. I mean, I think about the best investment that I've made in the supply chain world. And that was meeting Brad Jacobs in 2010 and working with him on a growth strategy and co-investing with him in the acquisition of Express One, which would become XPO. And Brad took that company from a $70 million, really a $10 million EBITDA, $70 million value company to a $20 billion company over 10 years, with a string of acquisitions along the way and tremendous growth. If you invested $1 in 2011 and at the moment of the acquisition, you would have made 50 times your money over a decade. And I think what Brad did right, and one of the many things that I learned from watching him, was it wasn't just that he was laser focused on what he wanted to do, which was consolidating the logistics industry and buying a string of great companies that were best of breed in different areas and leveraging technology and infrastructure across all of them. But it was also how he looked for acquisitions. So because XPO looked at, thousands of companies on some level, hundreds seriously, and in the end bought about 20. And it's worth noting, what did he not buy? He did not buy the companies that were good at several things, 3, 4, 5 different things. What did he buy? He tended to buy companies that were great at one specific thing. I'll give you an example. When he bought New Breed was a leader in contract logistics, and they sort of tech, telecom, medical, a customer like Verizon, Siemens, Apple, Boeing, and they were great at that one thing. And there was a lot that they didn't do, but they were so great at that one thing that when Brad bought the New Breed business, he said, you guys are going to be my contract logistics platform. And not surprisingly, that became the basis for what today is GXO and the management team. And, Ashfaq, who is the CIO for New Breed, rose to become CEO of contract logistics for XPO. And what happened after that. Similarly, if you look at some of the other areas, the foray that Brad did not buy a series of trucking companies, but he made one major acquisition, which was Conway. And of course, that was a market leader in LTL. And guess what? Conway is now the foundation for what is XPO today, the LTL trucking business. And so, I think the lesson that I learned watching Brad was focus on doing one thing really well. And the thing that I've tried to do with the rest of our portfolio at Cambridge is to back companies that are doing an outstanding job in that one thing. And green screens and ReverseLogix in predictive pricing and returns management are certainly two illustrations of that.
So I love that you told us that story because it puts something in context for me. So I met Ben at a conference last summer, and I was sitting at the table with him and talking about a bunch of stuff. And I actually asked him, I'm like, what kind of company, right? Like I've been thinking about like from a startup perspective, productization, what should we do? And I remember Ben's response be like, because he knows the background around Genco and history. And he goes, you know what? Build another something like Genco, right? Like that's literally. And I was kind of like, okay, that sounds really big, but I see where, your background, your history kind of tying into, right? Like that type of value creation. And again, that hyper focus, reverse logistics as an example for Genco, like that made it, right? That took it to the next step. And of course, contract logistics and everything else that went along with it and e-commerce and whatnot. But you just put that in context for me.
Yeah.
Sorry.
I love that.
If you don't aim high, you never have a shot. So you might as well aim high.
Trust me, it was a little scary when you said build something like Genco.
So in addition to the laser focus, Ben, you obviously get the opportunity to look at a lot of different investment opportunities. You mentioned obviously the AI, we've talked about reverse, but when you're exploring those opportunities, what is there something or the things that make you say this one's got potential and I'm interested in exploring it further? Like what are those few characteristics? Maybe it's the founding team or the executive team and the moat and the focus, but would just love to hear your perspective on that.
Sure. So Dan, here's the checklist that I go through when we look for a new platform. So the first is, do we think that they are a great company focused on doing one thing really well? And not surprising given what we've been talking about over the last few minutes. So, are they a leader or do they have the capacity to become a leader in some area that has tailwinds, whether that's a niche within e-commerce logistics or medical logistics or U.S.-Mexico cross-border or some other area where you know there are tailwinds for long-term growth, and where what they have to offer is special. Then secondly, how can you prove it? Well, you can prove it with great customers, great case studies, and illustrations that they're doing an outstanding job. And so that might be customers that love them, or it might be technology that's highly differentiated. It's worth noting, by the way, that and this may sound crazy or at least controversial, but customers that love you, not always the best predictor of long-term growth. In fact, if you look at a lot of the high-growth tech companies, they've been very good at figuring out the MVP, the minimum viable product, in order to do the thing that matters. Obviously, you'd rather have customers that love you, but if you are doing enough so that the customers like you and are using you, and then are really investing in, okay, what's next, sometimes that's better. So I just mentioned that as a little bit of a curveball, but really comes under the heading of they've got to be doing something special, and whether that moat comes from the customers, the technology, or otherwise. That's two. Three is the people. At the end of the day, we always look for great people that we like, that we trust, that we think have the kind of leadership capabilities to build something big. And those people sometimes decide that they don't want to be along for, a 10-year journey of building the business. Maybe they want to do it for 5 years and then sell and recap, and that's fine. But we want people that have the capacity, the motivation, and the drive to build something great and to be along for the journey. And we want to be along for the journey too, and in support of those outstanding people. So, this is very much a people-centric business. And then fourth is the financials. The business has got to be big enough that it makes sense. At Cambridge, we write $10 to $50 million equity checks. And so those are either buyouts or growth equity investments. The buyouts, these are generally companies doing $5 to $20 million of EBITDA. Would we look at something bigger than that? Maybe, but usually it ends up being just sort of a much more competitive discussion, and you end up with more banks and more buyers. And it doesn't mean that we can't do it or that we don't want to do it, but we don't want to be spending time where we're one of 100 plus buyers talking to somebody. We want to know that we're special to them, they're special to us. There's a unique fit. And we found that tends to match up well with those 5 to 20 million EBITDA companies that are more often than not entrepreneur-led, entrepreneur-run. And then on the other hand, on the growth equity side, typically supply chain software companies, those are usually 5 to 20 million of recurring revenue. And whether they're profitable or not, the unit economics should make sense, and there should be some path to profitability. But they don't have to be profitable. It may well be a company like Green Screens that grew 5x last year is making very conscious choices about growth versus margin. And you could very well say, all right, I'm not going to invest in all that growth. I'm going to pull the throttle back. I'm not going to hire all these salespeople and all these customer success people. And as a result, I'll have a slower growth, more profitable business. And is that the right call? Sometimes it is, sometimes it isn't, but we want to have the option. We want the company to have the potential to be profitable or approaching profitability. And then look, the last factor is goals. There's got to be alignment around what does everybody want. So the founder that says, I want to build something great and I want a partner that can help me and support me in certain areas. And knowing that at Cambridge Capital, we have a set of operating partners who've built major companies in different areas of supply chain that can add a lot of value, and that pattern recognition adds a lot of value. Fantastic. The owner that says, well, I'm just looking to cash out and all I care about is money and that's it. Yep. Great. Wish him or her the best of luck. And by the way, we have an affiliated investment bank called BG Strategic Advisors, and maybe they can help that person run their auction and sell and cash out. But as Cambridge, we don't want to just be there for money. Obviously, the money matters, and we want to pay a full fair price for great companies and then help them become even bigger. But the primary motivation usually is, I want to get from here to here. And the money is a part of it. The resources are a part of it. The vision is a part of it. Pattern recognition is a part of it. And I would say all the companies that we've backed, the CEOs had the desire to build something much bigger and believe that we could be a helpful, supportive partner in doing that. And so I think, in my mind, those are the 5 factors that we care about the most.
Very well said. That's amazing. I got to take like all of these like 1, 2, 3s, the 1, 2s, the 1, 2, 3, 4s, and now the 5s, right? I'm going to actually have someone in the team actually go through, note them down so that we can just create some joint blog post and put it out there, because these are some really sage words.
I appreciate it. Yeah. And I got to give you different numbers occasionally. Everything can't be 3 points, right?
Yeah, exactly.
All right, Ben. Well, I'm excited for this last little segment here in conversation. You alluded to it earlier before, so I want to spend some more time on the BGSA Supply Chain Conference, which is really a convergence of the top minds in the industry. Would love for you to walk us through its inception and, what could someone achieve? What's the aim during the event? And what are some of the standout moments or outcomes that you've had over the past?
Yeah. Well, Dan, thank you. This will be our 18th annual BGSA Supply Chain Conference, and it's been a pleasure for me to get to meet so many amazing CEOs and leaders and learn from them. And I think the goal for the event is really, we want the BGSA Supply Chain Conference to be the place that gathers the best and brightest across all areas of supply chain. And so not just truck brokerage or freight forwarding or warehousing or supply chain technology, but a whole host of other areas as well, cross-border, U.S., Mexico, global, spotlight on difficult issues, like labor issues. And certainly there's been a spotlight on labor battles in the industry over the last year, or M&A, or recruiting, or just navigating the freight recession, getting ready for what comes next. So really, the event is all about top leaders talking about the top issues on their minds that help make them successful in what they do. And so a couple of examples or highlights things that stood out for me. I mean, one, since you brought up, we talked about Genco before. We've had Genco's founder, and CEO Herb Shear talk about the process of the sale of his business to FedEx, which was a pretty cool discussion. Or the Transplace Uber deal, which came together at our conference, and discussion about that. Or stories from people, sort of how I built it stories. Brad Jacobs doing a terrific town hall discussion around how he built XPO and what's next. Richard White doing an incredible story last year about how he went from being a guitar mechanic for AC/DC to the founder and CEO of one of the world's most valuable software companies, WiseTech, and how he grew it. His mentality with respect to building great software, to building teams, to acquisitions, to treating each line of code like a religious text. I mean, there are a lot of fascinating things that I learned, and I think everybody learned from getting to hear from people like Richard and Brad and Herb and various others. So it's a terrific event. It's by invitation only, but I'm happy to share invitations with anybody who's listening that would like to come. Just reach out. It's if you go to the BGSAconference.com site, you can see all the details. And if you reach out to me, Ben at CambridgeCapital.com, or find me on LinkedIn or Twitter, I'd be happy to send you an invite. And we love the fact that there's been a culture of inclusiveness at the conference, where people tend to be open and discuss big issues in their business that, frankly, you are not likely to see in other places. You won't see them in Wall Street conferences or CSCMP or other trade shows. It's just there's a level of trust and rapport that I think that's been part of the culture of the event from day one. And I think it's a reason why things get done there. People are willing to let their guards down, be candid, and talk about the big things that they're considering, and whether that leads to an investment or an acquisition or or the many lifelong friendships that have been born out of it. It's a special event, and be more than happy to open it up and share with your audience.
And Ben, I have to say this, for years I've been watching it, right? And so I do have to say this. It is by far one of the most exclusive kind of, like, I know you said like invitation only, right? Like and the folks that actually come there, I just need to inform the audience. We are talking about one of the most exclusive events within the supply chain space where, if you are getting invited in the supply chain space, chances are you made it. So that's how I've always looked at it. So happy that you are doing it again this year. I saw the lineup of the folks that are going to be there. It's again the who's who of the space. And again, from a candid kind of dialogue standpoint, I saw some of the speaking things. Do you want to kind of highlight like who's going to be speaking or some of the events out there this year?
Yeah, I'd love to do it. So first of all, if you look at some of there are lots of high profile people that I'm excited about, and at the risk of picking a few and omitting anybody, let me just showcase a few. So one of the topics is the question of what's the outlook for the coming year. And so we have CEOs from a wide variety of areas. If you're curious about what's happening in the contract warehousing and logistics arena and fulfillment, Laura Ritchie, the CEO of Radial, will be there. If you're curious about what's happening on the Canadian side of the border, John Ferguson, CEO of Purelator, will be there. And then for sort of domestic contract logistics, Dennis Riley, the CEO of Kenco, John Burke, the CEO of Armada and the food supply chain. On the other hand, if you think about what's happening in the deal arena, Tom Schmidt, CEO of Forward Air, which has been in the news for a deal they almost did and then decided not to do with Omni, which will be pretty interesting. Paul Martin, CEO of Ascent Global Logistics, which he and his private equity partners just bought, and sort of an interesting spotlight and case study and story about that. If you're curious about the outlook on the transportation side, people like NFI CEO Sid Brown, Mode Global CEO Lance Malish, ArcBest CEO Judy McReynolds, RXO, spinoff of XPO CEO Drew Wilkerson. Yeah. So, these are major multi-billion-dollar companies. Then on the other hand, if you want to look at the sort of the technology side and the innovation side, to give you some examples, Rod Painter, the CEO of Trimble, which is now I think a $20 billion business, so enormous. But then on the other hand, Kendra Tucker. Kendra's the CEO of Truckstop, and Truckstop is, of course, one of the largest companies in the digital freight matching arena and increasingly broad range of other services. Then if you think about the realm of document automation, Renee Krug, the CEO of Transflow. Then to go to a totally different spot, what about chief supply chain officers? Well, we have the CSCOs and leaders of organizations like Clorox, Walmart, Google. So it's pretty amazing, I think, and the talent and the diversity of leadership capabilities and ideas, I think, is quite special.
This is phenomenal.
Can't wait. And if that wasn't enough, why don't you share, Ben, with everyone where the location is in January?
The location, January 24th to 26th, when the northern half of the U.S. is convulsing with snowstorms, is in sunny Palm Beach, Florida, where as of right now it's 80 and sunny and as it is every day, and just about. And it's at the Breakers Hotel, which is one of the top hotels in the world, top 5 in the U.S. And it's a fantastic place. And really, we spend a lot of time and effort to make sure that it's not just a place where the best and brightest gather to talk about big issues, but also where there's a top-notch experience. And so, ranging from everything from the ambiance and the food to, if you're a tennis player, getting to play with Wimbledon champions like John Lloyd, or if you play golf or golf on the fantastic breakers ocean course and a whole host of other fun things. I should add one thing. I certainly don't want to promise this, but there's always a surprise or two. One of the surprises last year, if you think about the people that care about supply chain, you might be amazed how many people care about supply chain. One of our friends who showed up, who has a branded business and is evaluating new supply chain partners, is Mike Tyson. So Mike Tyson was here last year.
Interesting.
And Mike's wife, Kiki, who is really the brilliant business mind behind Mike's businesses, sat in the sessions and interviewed some of the supply chain CEOs. She had read the 10Ks for some of the public companies that presented and had some pointed questions. And I have to say, I think she probably knew the sector better than some of the other folks that had been in this industry for decades. So, so you never know what terrific people will show up.
This is amazing. And I actually look forward to it this year. So,
likewise.
Yeah.
Well, that's awesome, Ben. Again, thank you for joining us for your second guest appearance on the podcast. We look forward to seeing you in January. And again, for everyone listening, check out the website that Ben provided. We'll also link everything in the show notes so it's easy access. And again, thank you for joining us, Ben.
Thank you, Ben.
Thank you very much. You guys are terrific.
Hi, I'm Ninad Acharya, CEO and co-founder of Fulfillment IQ, and I'm here with
Dan Call, CRO and partner at Fulfillment IQ. We're the team behind the Ecom Logistics podcast. Our mission is to provide you with genuine insights from our work alongside logistics leaders to help you improve your supply chain.
In the Ecom Logistics podcast, we share the knowledge and the insights we've gained from working alongside amazing brands, retailers, 3PLs, and VCs, so you can make the most out of your supply chain journey.
If you like what you're hearing, we'd truly appreciate your support with a 5-star rating on your favorite podcasting channel. Your feedback not only keeps us going, but also helps others find the podcast. If you think Fulfillment IQ can assist you, or if you have an idea related to logistics, just reach out to me on LinkedIn. I'm always up for a chat and ready to explore new possibilities together.
Stay tuned to the Ecom Logistics podcast on your favorite podcast platform for fresh and practical insights into e-commerce and logistics. Until next time, let's keep making a difference in logistics together.